Good morning, good afternoon, and good evening, depending on where you might be in this world. It's a beautiful Friday morning here in the East Coast. And the first blog that I want to do, because I want to emphasize it more so than the morning update on the Bitcoin, is a post that I made yesterday regarding an aggressive ETF-based portfolio. And I had a feeling they didn't hit the mark. A lot of the readers and followers kind of maybe didn't pay too much attention to it or didn't see how much of a gift horse this method is and how much of a mid to long-term life-changing event process this portfolio can provide from a wealth increase point of view in the equity market. I believe that the Dow and the S&P are now embarking in a final blow-off topping process similar to Bitcoin, and that could bring the Dow to maybe 40,000. Call me crazy, I don't give a shit. I do only based on my analysis, okay? And we can double the S&P because the bubble phases, if you look at the dot-com era as well and every bubble in the back testing, they double or triple at the very tail end of the bubble, which is why I'm also projecting 15,000 for the Bitcoin as well. So this is a gift horse, my dear friends. Don't stare at it on the mouth. So let me just go over it one more time, and I'm going to add some very important additional meat to this. It's a select number of leveraged ETFs. That's right, 3x leveraged. Going against the many who say, oh, stay away from leverage. This is not margin. This is leveraged. Okay? SPXL, ZIV, and TMF, and I'm going to add TQQQ, and I'll explain that a little more later. And it's very easy. Every 2 weeks, I'm going to find, second Friday, let's say, I'm going to do a chart, just like you see here. And in this portfolio, which is mine, SPXL, ZIV, TQQ, and TMF ETFs will be used. Now, the only one that's really not leveraged is the ZIV. But boy, this can give you some stunning returns. So, of these four, SPXL is a 3x leveraged towards the S&P 500. ZIV is a medium-term VIX inverse. It shorts the medium terms. TQQ is for NASDAQ 100. TMF, 3x leverage for the long-term treasuries. The 3x's have decay values because of the fact that they are leveraged. But even with that, I'm going to show you by running a 6 to 12 month validation experiment, not live validation run with these, where I will use this site, ETF Replay, to do the charting for the last 3 months. For total percent return. I don't need a CAGR or drawdown right now, just the total percent return. And get the chart. It'll give me I don't pay attention to this because most important is the first top bar chart. I'll look at the percentages. These percentages are for the last 3 months rolling values. And any kindergartner can do this. You find the highest value one, 16.6% in this case. And which ETF is that? TQQQ. I'm going to put my beginning $100,000 into TQQQ. And 2 Fridays later, I'm going to come back and do exactly this. And if I again find that TQQQ is the winner, the outperforming ETF, I leave the money there. I don't touch it. And 2 Fridays later, if I do this chart again, and I find that maybe ZIV is now 18%. I take all my money, 100% of it, out of TQQQ ETF and put it into the ZIV fund. Simple as that. Every 2 Fridays, I will set an alarm, which I have for my own personal one, to remind myself that every second Friday I should run this scenario. And if I was busy, I was drinking too much, I went to a party or something, I forgot, then what you can do is, well, today's Monday, the following Monday, I should have done on Friday. No big freaking deal. If you forget one session wholly, it's okay. It has that much latitude on the forgiveness side. But I will try to be disciplined on this and follow that. Now, I will keep a running tally of the performance of this aggressive equity ETF portfolio. Again, I will name the ETF SPXL, TQQ, ZIV, and TMF. Today's date, yesterday's closing prices. Based on the chart I showed you here, percent gains over the last 3 months, rolling 3 months. I will select TQQQ, the Nasdaq 100 3x leveraged ETF, because that had the highest percent gain. And I will roll all of my 100,000 into this. And the number of shares based on the price will be 774 shares. Save that. So I have now all of my money allocated to this fund, to this portfolio, 100 grand, into TQQQ. And 2 Fridays from today, you know what? I'm going to make it a little more aggressive. I'm going to make it every Friday. Okay? Every Friday I will come and check this value and rotate it back and forth to whoever wins, whichever ETF wins. Okay? So portfolio P&L currently will be 0%. Total balance, 100,000. Profit or loss, we'll find out next Friday. We'll do this every Friday, make it more active. And after 6 months or so, after we see how the performance of this portfolio goes, then you can make a decision whether you want to apply it for yourself or not. Back tests have shown phenomenal returns. On an annualized basis, you can see somewhere between the range of 44 to 54, maybe even a 78% gain. I'm not bullshitting. I have seen this, used this, and I'm putting it out here to share it so I can help and do no harm. I have nothing to gain. I have no monetary incentive to gain by sharing this with you. I'm only giving it. I have nothing, I'm asking for nothing in return. But the proof has to be in the pudding, I understand. So, let's run this every Friday and see if we can see some massive profits. Okay.